Good afternoon. From the For the CME, this is Chris Robinson with your Traders Exclusive comment today, Thursday the 20th. What are we looking at in the grains and livestock? Well, let's start with the grains. Managed funds are still long, 70,000 contracts of soybeans. We had a good rally off of recent lows. In the past 3 weeks, we rallied 50 cents off the bottom from $9.37 to almost $10. We got to about $9.87. I would watch that 200-day moving average there at $9.78. That's continuing to be a lure and also a pivot. November bean options expire tomorrow. I've seen this before in the years I've been down here where the market tends to rally right up to the point where those options expire, and then the market will return to its downtrend once the options expire. So next week's a lot of opportunity. We may get another push higher. I think if we can get above $10, that opens the door up to $10.20. If not, we could be right back down where we were just 3 weeks ago. So we've had a good bounce, and I think tomorrow's options expiration will be really key and will give you some good opportunity, bull or bear. Secondly, we've rallied up 45 cents off the low in December corn. This in the face of a very large crop, very large bean crop. We've rallied here on short covering. The managed funds have been short about 180,000. They've cut it down to about $1.20, maybe $1.10. And again, I think moving forward, we need to get, if that leg is going to continue to go higher, we need to get December corn above the 100-day moving average, which is right around 358. So traders are watching those levels. We had a good 40-cent rally in wheat. Out of all three, the wheat has been sort of the weakest of all three as far as being able to hold that rally. The managed funds still have a good short there, probably about 100,000 contracts after being short about 130,000. So it's opening up the door to an interesting week next week, once especially we have the November options expire Friday. I would continue to watch that for opportunity. I would watch those 100 and 200-day moving averages. Those are great magnets for both bulls and bears. You either want to be getting in there or getting out there, but it's something for you to focus on. Switching over very quickly to the livestock. Continued bearish story. Plenty of supply, not only of lean hogs and pork, but also for live cattle and feeder cattle. We've seen a tremendous sell-off in the past year and a half in all those markets. We're currently at 14-year lows in lean hogs. We've got the fat cattle at 7-year lows. And we're testing major support, which goes back quite a long time. Tomorrow, we have a cattle on feed. That's basically a supply and demand for cattle, and that could give you some opportunity. The rubber band's been stretched very, very far. However, the managed funds, there we are again with the managed funds, they're still long about 20,000 contracts of fat cattle or live cattle. So they've got to go somewhere with those things over the next 3 to 6 weeks. If they decide to pull the ripcord and sell more, you could have a continuation to the down move. So opportunity there, I think, in the livestock is looking for counter trend moves. At the end of the day, if you're a producer, you really got to be making sure that you've got your bottom line covered or hedged. If you're looking for help with your speculating or with your hedging, look me up online, Chris Robinson. Have a great rest of the day.